Welcome to Markets Now. I'm Michelle Rook with Don Rose U.S. Commodities, and we ended mixed in both grain and livestock futures trade today. But Don, let's talk about corn and soybeans, both kind of what I would call a steady day overall, or narrowly mixed anyways. And you have told me that we have to stop going down before we can go up, and at least we've started to do that in corn and beans, right?
We have, Michelle, and that's a good point because, it's a market that, the last 2.5 months, every time we'd get some neutral to negative news, we would go down and down hard. Now what's happening as we get this news that is neutral to negative, the market holds or goes higher. So we're in a good example of that. Look, when we had the cancellation by China of soft red winter wheat, we reacted very positive to that, actually had a key reversal on that day. So that's a good sign. It tells us that we've got a lot of this news dialed in. In fact, actually, we think that the bear news is fully dialed into the market, Michelle, and now we're trying to add some risk premium to the market. How much is going to be dependent on some of the cards that come up as we go forward. Probably the dominant issue is going to be the weather.
Yeah, so let's talk about that because we are seeing the drought monitor kind of expand drought in some areas. Is that going to get the attention of the trade at some point here?
Well, it is. I mean, when you look at it, it's not only Iowa, Northeast Iowa is kind of the epicenter, but it fans out into Wisconsin, Minnesota, the Dakotas, Nebraska. The Southern Plains and the Western Corn Belt are really on the watch list here. And, that may be one of the reasons we're getting some support in the wheat market too. Just better be on hold, better not get too negative in case this thing turns into something big on the weather. And remember, it's an El Nino year, but if we go into a La Nina, which there's some forecast out here that's going to happen, that portends a warmer than normal summer. So in a dry, droughty condition in Argentina, but not yet. But I think those are the things you think about as we're in a warm condition and dry.
Are the funds back in covering some of these short positions, especially in corn and soybeans?
Well, we see a couple things going on. One, the funds are covering. They had a record short in corn, record short in soybeans and oil. And what's happened is the end user is now covering on a scale down basis, and the funds are buying back just measurably. We haven't seen a wholesale exit, but these markets typically, if the weather turns threatening or it looks like our ending stocks are going to fall, and by the way, in the U.S., by the way, they did in the world on the last crop report, so that's a good sign. Ending stocks getting smaller, not bigger, so that's usually stability. But I think at some point in time, if it continues, they'll move out of their short into a long position. But time will tell, Michelle. But for right now, the selling has been abated. The bearish news seems fully digested in the market.
Yeah, we did kind of run up into some chart resistance today, though. $12 kind of stopping us out there on the soybeans, and in the corn, kind of that 445 to 450 area. Is that just chart resistance, and can we get above those areas?
Yeah, it's all about, timing, Michelle. These markets kind of ebb and flow back and forth. And no doubt at the end of the day, yesterday, today, these markets are overbought, stretched out, if you will be. They've kind of pumped the balloon up here a little bit. So it's a market that it's probably healthy if we just kind of relax a little bit, see what the news is going forward. And that's what you do in a bull market, a market that's turning around. You kind of measure, you see once what's there. Then if the cards come out with a little bit of friendly news, you go another leg up. So so far we've been doing that. You're off of the July corn, you're up like 33 cents off of the low and significantly off the soybeans. So call it a good start for now, but we broke out over the base in soybeans and we're still respecting the key reversal in corn. And also you have a head and shoulders bottom in the corn market.
Yeah, technically we've had some nice signals there, but you mentioned how much we've rallied off of the lows. And so I've got to believe, is there some farmer selling that kind of caps the rallies at times too?
Well, this is the time of year that the producer picks up the selling because, he wants to get prepared for the spring. So probably the last big push for the farmers right here before the field work starts. And then we'll see once that happens with the safrinha corn crop as they're pollinating. And no doubt, we think the producer's probably somewhere 65, 70% sold on soybeans, probably somewhere in that 65% sold on corn. So, they've been moving grain right along, but maybe holding off on some of the gambling bushels going forward, Michelle.
No doubt. Okay, so the wheat market did see a little bit of pressure here today. And, how much of that was the news of China canceling wheat?
Yeah, I think that's probably was most of it. We got a cancellation again. We got a punch in the nose, but it wasn't a knockout punch on that. You set back a little bit after some of these big rallies. So I don't think there was any really chart damage done. The fundamentals are as they are. I mean, they're a little bit negative. We got to get Russia, Ukraine to quit fighting each other, trying to race to the bottom on selling wheat in the world, and the rest of the world sitting there in amazement what to do. So we need them to change a little bit. And it looks like the acres in Ukraine are going to be down this next year on wheat, corn, and their general crops, probably down about 7% on all their crops, Michelle.
Yeah. And we should probably clarify, Don, that cancellation of wheat that we saw today by China, that wasn't U.S. wheat. That was actually French wheat, right?
Yeah, exactly. Yeah, that was. They canceled soft red U.S. wheat before, now the French wheat. And it looks like they're just trying to get a little closer to buying the cheaper wheat from Russia and getting a little more friendly with them as we go forward. So prices selling the wheat for Russia right now.
Yeah, that is definitely been a headwind for the market. Okay, cattle market had a nice close today. Live cattle scoring some new highs for the move. And is it all technical? Are the funds buying here, or is there something fundamental pushing it besides just this tight supply situation?
Well, I think it's one of those that, eventually it's going to be that old saying, where's the beef, because it's going to be tight as we get into the second half of the year. No doubt fourth quarter is going to be real tight. But I think it's the funds, the fundamentals are positive on the cattle. So underneath the market, the funds are buying the market on breaks. We're still well off the highs that we put in the fall, September, $6 to $8 a hundredweight across the board. But I think it's a market that we pushed up the demand. First we pushed down the supply with the weather. Now I think we pushed up the demand with this warmer than normal winter that we've had across the U.S. So box beef moving up. Packers probably losing somewhere $20, $30 a head, but it's manageable for him right now. So it's up to the consumer. Our export pace is slow. Brazil moving beef into the U.S. The last report in the last month was they moved about their exports to the U.S. were up about 50% over a year ago.
Yeah. Well, to your point, Don, choice cutouts are like in that 310 area, which is very strong for this time of year. So that probably is a good indication of the demand that you talked about. Are you worried, even though feeders were up today, that they're actually not the leaders like they were when we hit the record highs?
Well, I think when you look at it, I think the feeder cattle are respectful of what's happening in the corn market. It might be telling us that, the corn market's starting to show some footing here. And I think that's a little bit of an anchor on the feeder cattle. And, the feeder cattle have a lot of bullish news dialed in. I mean, you look at the bred cow prices, you look at the cow-calf pairs. I mean, it's a market that's pretty strong out there, but it has to be achieved down the road with some real meat sales.
No doubt. Okay, hog market set back here today. Was that profit taking, or are we seeing some hedge pressure, especially in those back months where those premiums are?
Well, I think we got into some areas that fundamentally you could argue that the summer month 105, 110 area is enough to the upside. You got some of these Elliott wave charts are kind of telling us that maybe we've got this final wave to the push to the upside. Back to the technicals again. But fundamentally, we've had a lot of liquidation in the hog industry, by the way, still going on, and a lot of shifting around. But I think for the pull, you have to say the hog market's continuing to improve fundamentally with the liquidation that we had. But particularly as we get into the fourth quarter, it looks like those prices are a little bit low yet, with the beef supply is going to be increasingly tight out there, Michelle.
Nearby contracts, though, you do see the lean hog index kind of stalling out. So that may limit that nearby contract, you think, for a while?
Well, in the seasonals, when you get into, as you get closer to April, it's a bit of a time frame where you got to be a little careful being too bullish on the market. Then we'll see what the summer does.
Gotcha. Thanks, Don. Don Roose with U.S. Commodities. That is Markets Now.